The other thing that's really interesting is that we're right now in DC at all-time highs. The DC market is about 17.3% vacant. The market availability is 19.5%. The vacancy downtown is close to 20%. So we're at all-time highs. And if you talk to the pundits, the co-stars, the CBREs, people like that, they're thinking, well, we're close to a bottom. But if you start eliminating all these agencies and all this office, all of a sudden they're now saying, we don't think this is going to recover until 2019. And we think that vacancies can go up by 2 percentage points, which is when you're talking 20 to 22% or something in that range, you're talking 10% higher. It's a major, major drag on the market. And let's remember that in DC, the office market is 11% federal government. Also, the federal government, as we were talking about earlier, they impact other jobs. For every employee, there's 2 contractors. So these are private sector businesses that are going to be impacted by these policies. So, it's this level of uncertainty about where things are going. The trend right now, which is the trend also in Denver, of seeing renewals happen, but they're happening in smaller spaces. So the 30,000 square foot tenant is now moving into a new building that might be 10,000 square feet. Now, this slide is interesting. I talked about earlier about 11% of the office stock in DC being federal. They also, take about 11% of the workforce. So right now we're finding out that DC, which everyone used to say is recession proof, isn't, because the federal government is now going to be the ones that may dictate the downswing in the market. You can also see that there's 130 million square feet of office out there. You can go back to that slide. Over here, it's talking about what percentage of leases are cancelable. So these are legally cancelable. We also know with the Trump administration, he has no problem going in and seeing if he can do things that he thinks are the right things to do, whether the law says he can do it or not. So here we're talking about through 2029, they can legally cancel 37% of the leases, and we know they're going to try to cancel more, and we'll see legally whether they have the ability to do. Guys, I want to hear from you all, because both of you, Brian, you're in the market 100%. Chad, you've been there for years and years. So I want to hear your thoughts about what you think is going on and how these policies will impact the DC marketplace.
Brian?
Chad's going to talk about data centers in a minute, so I won't steal that. But that, as Charlie brought up, it's going to be what potentially recovers some of the investor market. The other interesting thing that we talked off on camera about is that the leases are getting to be smaller and smaller leases. People still want to have a presence, but they don't feel that they're going to have as large a presence. 1 in 4 restaurants in DC predicts that they're closing by the end. So that's even with bringing people back to the market, back to the office space. So that's going to impact even further supply and other issues. What are those people that are leasing residential properties that were just recently built in DC? Where are they going to move to? Which city are they, leaving DC even more vacant property on both sides, the residential and commercial? It's